Now, if we just quickly flip back to gold miners, they have got this bull flag pattern. They started to perform pretty nicely. GDX, if we were to just throw a quick Fibonacci target on here, gives us an idea of the upside. So we could see GDX run to about $90.67, which is about a 8 or 9% move from there. If we take a look at SILJ, we drew on this already yesterday, saying that it looked like it has about 16% upside, could run to $30.58. So silver miners. The markets were relatively dull for most of the session here. Let me just, it's the SP 500 down on the bottom 10-minute chart. Market traded sideways, relatively low volume. Then the Fed hit at 2 o'clock and we saw the market ping pong around and eventually closed positive on the session. Now, we talked about the 30-minute chart yesterday in pre-market, how the market had run up. It's turned into a short-term momentum pattern. It's been holding sideways. We drew these little lines in here for all of these little pivot lows. All of these lows, the market's going to want to try and run those stops. And we said the market might still want to pull back about an 1/8% or more to try to run all of these tight little lows where short-term momentum traders and day traders and things like that have got their stops layered in. It's going to try and flush all of those out. And the market might want to drop and create some panic and then potentially go higher. Well, we had news last night that did exactly that. If we just scroll forward, you can see we had Oracle come out with news and we saw a pretty strong sell-off yesterday. Actually, it was this morning. And we saw price go all the way down to around this 6,800 level. And that's where it dipped down to. So we had this big waterfall sell-off. Oracle had not numbers people wanted to hear, and that's kind of put a spook on the AI side of things that maybe that bubble is coming to an end or slowing down. And so we saw a lot of these lows all get triggered. And if we zoom in on the chart, there's quite a bit for post-market or pre-market trading here. We saw big volume. And so a lot of people spooked out. And if we look at the daily chart, you can see we had a big long lower wick, came down to the 20-day, and then it's bounced back up. And so now that might have been the shakeout we were looking for. And the market likes to climb a wall of worry. People are nervous. We've seen this with the VIX. When we look at the VIX has been moving up over the past several sessions. Yesterday, it pulled back a bit. In overnight trading, it opened higher, and it's moving back down. You can see here on the 10-minute chart, it's fading back down. But anyway, the markets, in a nutshell, are doing exactly what we've been expecting, with the markets moving higher and then kind of running and chopping and trying to figure themselves out. And the NASDAQ has done the same thing. You can see the NASDAQ here. Let me just squish this chart down.
The spike came after Oracle released earnings that disappointed investors, raising fresh doubts about the pace of AI-related spending. The reaction was swift and harsh. Tech futures plunged, dragging the NASDAQ down more than 1.5% in overnight trading. The sell-off triggered cascading stop-loss orders, producing a steep waterfall decline before stabilizing. But markets quickly bounced, forming a long lower wick on daily charts, often a sign of capitulation. Rising VIX values suggested building anxiety, but volatility eased as buyers returned. Despite the scare, major indices recovered much of the drop, following a familiar playbook: purge weak hands, then reverse sharply.
The NASDAQ fell 1.6% in overnight trading, running a whole bunch of stops. And usually, as I've mentioned out, sometimes some of the biggest moves happen percentage-wise right at the end of a trend where everyone finally just gives up and the bottom collapses out, and then boom, it rebounds. And you can see we're starting to regain most of that. The market is down about just over 0.4% or 0.5% at this point. So definitely had that spook, that shakeout, big volume on the NASDAQ, as it's a little more tech AI heavy than the S&P 500. And that's where a lot of fear has kicked in and what we've been looking for, all these lows here to kind of get run and shake out stops. So let's take a look at the rest of the market. The small caps, let's just move up here. Small caps are actually positive in the Dow. Obviously, they don't have quite the weighting of the big tech. They did sell off in overnight trading. If we zoom in, you can see they sold down a little bit here, but they have recovered and they're back positive on the session, simply because they don't have the exposure to kind of Oracle AI type of stocks there. Today we are seeing money move into bonds. We have bonds up 1/3%. Again, overall nothing too significant, really just a little bit of a two-wave pullback. Looks like pretty much a measured Fibonacci move, this little sell-off, bear flag, and move. And now it's just trying to figure out what it's doing. overall it's stuck right here down through a lot of these highs into a support zone, also the 150-day. And so again, we're just leaving that, let that mature, which way bonds are going to go. It's, bonds are still in a massive bottoming formation when we zoom out, lots of volatility in there. And, I could argue both stories. I've heard good arguments that, rates could go a lot lower again. I've also heard rates could go a lot higher. Inflation could spike up, which is kind of where I'm leaning. I still think we're going to see inflation move up. I think we're going to see interest rates hold up or move higher, which could put bonds continued in a downward move. And I think if rates were to shoot higher, that could also totally mess with the real estate market. Not that they're totally interwound that way, the way that I think the rates could move. But again, I think the real estate market is going to be in for a real beating.
While technology absorbed the brunt of the panic, other areas showed resilience. Small cap stocks shook off their overnight weakness and climbed into positive territory, benefiting from lower exposure to AI-linked giants. Bonds also attracted inflows, rising modestly as investors sought temporary safety. Yet longer-term charts reveal a bond market still stuck in a broad bottoming phase, struggling under competing narratives about future interest rates. Inflation expectations remain uncertain, and any renewed upward pressure on yields could destabilize real estate markets further. Currency markets mirrored the tension. The US dollar continued slipping within a multi-month consolidation zone.
Now, obviously, with the rates, we're seeing the dollar index move. The dollar is down pretty sharply yesterday, down again today, about another 1/3%. So we're seeing a bit of unwinding, lower interest rate. Usually there creates a little less demand for that currency, and we're seeing it pull back. Overall, the dollar is very similar to the bond market in terms of it's been in a big downtrend. It is still in a basing formation, trying to figure out what it is going to do if it can break through these levels. So if we just kind of draw a box through here, you can see we're in this kind of stage one base. It's carving out a bottom. And at this point, if this could work out to be a bull flag pattern, which I am expecting at some point, I think we're going to see the dollar move higher, which would kind of fall in line with potential rates moving up, inflation kicking in. Again, we just have to let the markets, we can think what we think all the time, but the key is to follow the markets. The dollar is still in this basing formation, and it's just working itself out with some recent news. And it's had a very nice multi-month run, and it's just pulling back into a very controlled zone, into a support level, into these highs, this pivot zone. Now we are seeing gold uncertainty. We're seeing gold move higher this morning, up 1/3%. It was trading higher earlier this morning and it's pulled back a little bit. We have silver up 2.5%. So silver definitely the leader here, really picking up and running with it, continuing to extend up. So we're seeing a nice move there. If we go and take a look at platinum and palladium, they move very similar in most cases. They had a big sell-off yesterday. They all had they gapped higher, sold down in a big way. Today they're regrouping most of that or getting that back. Platinum is up 2.3% this morning. Palladium here is up 1.6%. So really kind of negating a good chunk of yesterday's move. And I think there's just a lot of people trying to figure out where to go. And I think interest rates and everything platinum and palladium are very, very tiny markets. It just takes a small group of people to get nervous, or one seller really can drive these markets around if they want to get out of something for whatever reason in a panic. So the precious metal space obviously is kind of on fire still. It's all been taking a pause, but is pointing to higher pricing, and that something big and bad in the economy, I think, is brewing, or in the world in general. Oil, maybe Oracle's news, kind of a little bit of bearish news, is putting some pressure on oil. I mean, they're not directly related, but overall, if people are worried about a bubble and about things softening, maybe people are moving out of oil today. It is down 1%. We have natural gas down 3.6%, so it just continues to sell off. It is down, almost 20%, probably to the low. Yeah, pretty much 20% in the last 5 sessions. So that's obviously, this is why natural gas is called a widowmaker. It moves very fast. It is pretty unpredictable. Kind of like silver in a lot of cases, it's just noisy. It can have beautiful trends, massive trends percentage-wise, but it can really shake you up, and you got to really go through the roller coaster or the washing machine sometimes. So that's, interesting there. Now, there are some interesting, I haven't pulled this up. I pulled this up many years ago. I haven't looked at it in a long time, but looking at this cycle, the Benner cycle here, and you can always pause this and take a look at it, but this is really coming into line with this B-year cycle, years of good times and high prices. It's time to sell stocks and values of all kinds of stuff. And here we are coming into the end of 2025. 2026 is supposedly a cycle high.
Gold and silver resumed their upward trajectory, reinforcing their role as defensive assets during market stress. Silver in particular surged more than 2%, outperforming gold and signaling renewed speculative interest. Platinum and palladium also rebounded after heavy selling, highlighting how thin participation in these markets amplifies volatility. Meanwhile, commodities tied to economic strength struggled. Crude oil slipped and natural gas collapsed nearly 20% in just days, reflecting concerns about softening global demand. Traders recognize these extreme moves as characteristic for gas. Its nickname Widowmaker stems from dramatic price swings that can whiplash even seasoned professionals.
We can go over this in more detail in another time, but the general consensus here based on these longer term cycles, which these aren't always perfect, trying to predict cycles and things like that, it gives you an idea. Is the tide going up or down? Do you have a headwind or a tailwind kind of helping you or hindering you? But overall, the market here should be starting to stall out the economy. This is where things could get very ugly. This is what I've been trying to prepare everybody for a long time, is we could go from 2026 and be in a very difficult market condition, environment, business, all of that stuff till 2032. Give or take a year or two. These cycles are not perfect, but definitely coming into some headwinds. And this is where a lot of people, if they are not protected for these markets, this is where it could be one of the most difficult waves in their life financially, because most people have the most money they've ever had. They're closest to retirement they've ever been, or they're deep into retirement. And the last thing they want to do is watch their accounts drop 30, 50, 60, 70%. And the whole world is likely going to change and come out of the next recession in a very big way, very robotic, very AI. It's going to be a totally different world. Who knows what currencies and precious metals are doing? I think there's a changing of the guards here for the world of what's going on. So definitely need to make sure you don't lose your money and give all of that back. So some really interesting stuff unfolding, and all this is playing into the giant momentum that all the charts have been talking about, that we've been covering based on our stage analysis and what different commodities and assets and sectors are doing. The markets have been telling us we are brewing into something big and bad. It's just a matter of when. And this long cycle, this long-term multi-wave cycle here, is telling us that 2026 is most likely going to be the year. Now, when? Maybe near the end. Could be come January. Who knows? Give or take, none of these years are dead on. They can be plus or minus a year or two at times. And we just have to be prepared. And we are. So that's all that really matters here. Let's take a look at Bitcoin real quick. Bitcoin down 2.75%. It looks like a pretty big bear flag. Doesn't look the greatest. Could very easily sell off and roll over. Again, I'm not a fan of Bitcoin at this point. Talked about it. I think it's in something like this, meaning it could hit a lower low over here. I feel like this move right here could very easily be this. Maybe it's this. Either way, I'd be very cautious if you hold Bitcoin. It is in a downtrend. Short term, and could end up falling a lot further and breaking these lows, potentially breaking down towards the $70,000 mark. Now, if we just quickly flip back to gold miners, they have got this bull flag pattern. They started to perform pretty nicely. GDX, if we were to just throw a quick Fibonacci target on here, gives us an idea of the upside. So we could see GDX run to about $90.67, which is about a 8 or 9% move from there. If we take a look at SILJ, we drew on this already yesterday, saying that it looked like it has about 16% upside, could run to $30.58. So silver miners definitely have the biggest bang for their buck. Silver is already breaking out and leading the way. And the chart patterns look pretty strong here. Definitely some strong volume accumulation. So money's moving into this space. And I think the markets are really trying to break, just these highs. It's getting up into this resistance zone and getting close to popping and really starting to extend to the upside. Overall, pretty bullish across the space for the precious metal area.
Beneath short-term turbulence lies a deeper narrative. Long-duration market cycles, such as the well-known 18-year economic rhythm, suggest the U.S. and global economy may be approaching a major pivot around 2025-2026. Historically, these periods precede recessions, asset revaluations, and structural shifts across industries. With AI, automation, and shifting geopolitical alliances accelerating change, analysts warn that the next downturn could reshape currencies, employment, and wealth distribution. For investors nearing retirement, this phase may carry the greatest risk in decades. The charts increasingly point to a broad momentum buildup, hinting that the market's calm before the storm may be nearing its end.
And another big mover yesterday was the dividend space. So they've been flagging down for a little while. The stock market's been kind of drifting slowly sideways and higher. Dividend stocks have been going down, but definitely got a little bit of a bid there yesterday. Money piling into the dividend space, showing it looks like a bull flag. Looks like it wants to extend and push higher. But when we zoom out on the dividend chart, it has not been performing very well. Obviously still down dramatically, nowhere near the highs, and just not really finding too much of a bid. Now, when we look at it on a short-term basis, it went from a downtrend. It got a little overbought. It was able to push through there and shift the momentum to neutral and then go into a short-term bullish phase, which is green bars. And then over the last couple sessions, it's dipped into this lime green oversold territory where it's been accumulated. Now it's starting to pop and move higher. And we can see this little bull flag and this pop. And we could see potentially the dividend space come right back up into these highs. If we were to let's just grab this low, this high, and this low. You can see it pretty much puts us, if I draw a line across here, right across these highs. This previous high, this other high. So if dividend stocks get up there, I wouldn't be surprised if they get slammed and get hit with some selling, because it is a major resistance area where lots of sellers are lurking. Not only that, but that's where the Fibonacci levels here are going to run out of steam. So there's some potential for a 3% upside move before it runs into resistance. Again, I'm not a big fan of the dividend space at this point. I will love dividend stocks potentially when we get into a major market cycle low, potentially over the next couple of years. And then dividend stocks, buying some of the most solid companies with dividends is going to be an amazing play. But buying them up here during a cycle high where we know everything is kind of overbought and there's a ton of risk just doesn't make sense. And that's probably why dividend stocks are kind of underperforming. It's, I think, some savvy money people know that, hey, you don't own them just because they pay a dividend. They actually carry a ton of risk to the downside. In fact, in many cases, much more downside risk than the stock index itself, because all retirees panic and sell at the same time, the same group of stocks, and they all get hammered. Last but not least, let's take a quick look at NVIDIA. And I'm just going to flip to a chart where we can see pre-market here. Overall, a little bit of a pullback this morning in NVIDIA. Surprisingly, Oracle was down obviously sharply, about 12%. And NVIDIA really only getting pulled back a little bit. Let's actually take a look at Oracle here. You can see the Oracle shares, a big drop there. Now, they had really good news not that long ago, and everybody was super excited, and the stock shot higher. What did it shoot higher by? It shot higher, in a 2-day window, it shot 41% up, and then numbers didn't look so good. Now it's down about 14% on the not so good forecast for the space. So anyways, this is where we're seeing the pain in the market today. Oracle sending a little bit of a shockwave through the tech, through the AI space. But again, surprisingly, NVIDIA is holding up very well. This is more so stock-specific selling with just a little hint of weakness that's causing some people to sell some other stocks.
Bitcoin continues to weaken, forming patterns reminiscent of previous breakdowns that preceded sharp declines. A test of lower support, possibly near the $70,000 region, remains possible. Precious metal miners, however, show growing strength. Gold miner ETFs are forming bullish continuation patterns, while silver miners display the most upside potential thanks to accelerating volume. Conversely, dividend stocks remain stuck in longer-term downtrends despite short-term rebounds. Their vulnerability during market stress, especially among retirement-heavy holders, keeps them at risk until broader market conditions improve. Even high-profile stocks like Oracle and NVIDIA reflect the fragile sentiment defining today's shifting financial landscape.